Welcome to The Curve Weekly. This is our weekly podcast where we are reading the finance news so that you don't have to.
I'm Vic Harris, a financial expert.
I'm Sophie Hallwright, and we are still figuring out my byline. I'm not the finance expert, but learning alongside you. And in today's episode, what are we speaking about, Vic?
We are talking about the possible trade war 2.0 between the US and China and why the stock market is not loving it.
We're talking about every runner's favourite app, which is actually going public.
And one sector that's having a big comeback.
Vic, you really deserve a crown for this. When I saw this in the news, I thought, oh my God, Vic knows what she's talking about. Cash ISAs in the UK. There's been some big movements there. We'll explain what's going on.
And we're finishing with a bit of Taylor Swift.
Yes. Oh my God, this is really exciting.
She is killing it. Okay, let's start with the trade war.
Oh, hi everyone. Sorry, we're a bit late. We're a whole day late. It's our producer, Emily. She was vomiting or something last Friday. How dare she?
How rude.
I know.
We have a podcast.
What are you
People
doing?
want to listen.
Taking a day off work? You joking?
It was so funny when you messaged being like, I'm sick. I'm like, oh, that sucks. You know, like, obviously take as long as you need. Completely forgot about editing.
I know, same.
And then someone comes in, she's like, oh gosh, what are we going to do? And I was like, oh, what do you mean? We can just record. And I was like, oh, I forgot
that whole thing that
job.
takes a whole day to do.
Oopsies. Yeah, and then it was kind of panic mode.
I would actually be kind of interested to know, because obviously this is now coming out on a Tuesday. Like, we're just looking at different days to release podcasts. It's a long story, but would it throw people if we were to all of a sudden be releasing the Curve Weekly on a Tuesday instead of a Monday? I would really like to know. Maybe we put a poll or something. Can you vote? Do you prefer listening to your news first thing on a Monday, or do you kind of not care? Is Tuesday fine?
Because we used to do Tuesday.
Yeah, I don't know why.
Because we recorded on a Monday morning, and then that was just like
terrible. I think it was just because it was a
Monday
shit vibe. I think recording on a Friday is way more fun.
Everyone's like, morning.
Yeah.
Morning. Yeah. Whereas Friday, everyone's
your
like,
weekend?
morning.
I'm tired.
So lots.
Yeah, there's been so much going on. Should we start with the trade wars?
Trade wars.
Is it plural or one?
It's just one. Well, it's 2.0. So yeah, I guess you're kind of right. It's this second iteration of the same existing trade war between the US and China.
I'm kind of fine with this story.
Oh, I'm so sick of it.
What would we talk about though? If it's not Trump, China, America. I was thinking this the other day. What the did we used to talk about on the Curve Weekly before Trump was in power?
I know.
He's really giving us a lot of content.
It's probably Elon Musk.
Oh, you're right.
Yeah, and Taylor Swift. Oh, well, she's back in the news today.
Don't you worry, guys. We've got a Taylor Swift update today.
Yes. So last week, for anyone who missed it, the S&P 500, so the top 500 companies in the US, had quite a bad day. Fell about 3%, which doesn't sound that bad, but in one day, that's quite a big move.
And so this is the whole S&P 500, right? So if you'd looked at every single company, they were down 3%.
No. On average. So, yeah, if you added together all the returns of those 500 companies, yes, it would be down 3%.
So if you looked at a graph and you were looking at the S&P 500, which generally goes up and down and up and down, it's like a little, is it a metronome? Is that thing that scribbles? It's like a lie detector. You know in movies where you see and they're like, did you or did you not cheat on your husband? And it's got a little scribbly line that's like going like this.
Yeah.
And if someone's lying, what is it called?
Polygraph.
A polygraph. And it goes up when someone's like, no, I didn't. And they did. This is kind of what the stock market does. It just like ziggles up, ziggles down, ziggle. Yeah. God, it's a rough
like
day
everything's great, everything's great. Oh, no, it's not. Everything's great again. Oh, yeah.
That's and there was a big last week.
Yeah. And the reason was, so this tit-for-tat with China going on in the US, and you know, the US was like, okay, if you're exporting your goods to the US, we're going to slap you with a huge tariff. That's what happened in April. China's turned around and gone, okay, you know,
oh God, what have they done?
If that's your fight, we're going to put really tight export controls on rare earth metals. So that is things like
gold?
No. Lithium. So like things that go,
batteries.
So lithium is like graphite as well as one of them. Those are the minerals that go into the semiconductors and all in the batteries and everything.
Oh my God.
So they're going to like the first part of the value chain
and being like, good luck out there.
And that's what's used to power pretty much every electric vehicle and every smartphone.
Does all of that come predominantly out of China?
90% of the global supply comes from China. So this is a big to the US. Then the US retaliated and said, okay, we are going to put a new 100% tariff on Chinese imports.
Oh, for
and
God's
it was accusing
sake.
China of manipulating like global supply chains. And anyway, I'm like, when will this end?
I'm so here for it. I know that this is absolutely the most bratty attitude to have ever, but I'm kind of love it. Like, get the popcorn.
I just get like we are the ones that suffer, right?
Right.
You know, it's just so frustrating. It's like you're kind of caught in the middle of this drama that you don't want to be a part of, but you're dragged into. It's kind of like being the best friend when like two people break up and you're friends with both sides of the couple, and you're like, he said this and she said that, and you're like, guys,
Sort your shit out in private. But
Yeah.
how will this affect people? So does this mean smartphones will get more expensive?
Well, hopefully they'll sort it out, because we all know that Trump kind of comes out with something and then what actually ends up being implemented is not what he initially comes up with. You know, like even the trade war and the tariffs back in April, you know, it was a big song and dance, and then what actually got implemented was way, way less. But investors did panic and were like, oh my goodness. And stocks, particular tech and export heavy stocks, so if you think of like Apple, Boeing, Ford, they all hit the hardest. And then like electric vehicle companies, semiconductor companies, like all of the companies that would be impacted the most fell the most. And safe assets like
Gold.
Got this gold.
Know the answer. Skyrocketed.
Yeah.
We put an episode into the Investing Club, which will be released publicly, I think, this week. But if you want access to it ASAP, it is a really good episode to understand everything about gold, what's going on, because it is one of those things where it's going up and up and up, right? But you have to decide if you want to invest in it or not. Some people, when it's skyrocketing, are not going to be jumping on the bandwagon, but you might want to, because I guess this could keep going, and that would mean gold would keep going up.
Yeah, more headlines we see like this just fuels gold as an investment, because it just keeps going up and up and up.
What are the flow-on effects for consumers with this? Like, what are things that are going to get more expensive?
I think more broadly, like it's hard to see where this will land, right? Will it be 100% tariffs? Will it be 50? But I think broadly, it's just going to mean slower growth globally, because goods aren't able to flow as efficiently as possible. So the world is just going to slow down in terms of growth. We're also...
Sorry, I just look at my disgusting. This is from me getting caught in the rain. I've got a wet sock and shoe, and there's like brown
white
shit
socks
all
never
over
last
it.
as white socks for me.
Someone told me, so in the weekend I wore white socks with my loafers, and I was quite embarrassed about it. I was trying to like cover it with my pants all night. My mum said to me, no, that's a look. The white socks with black shoes is the Michael Jackson look, and you should be doing it. And I
So
thought,
she does it.
So here I am. Monday. And now they look very disgusting. Okay, no one can see my feet right now.
So it just means slower overall growth for the globe, for the whole world, essentially, because everyone's affected by this. Yes, China and the US are fighting, but consumers, companies, different countries, like everyone's affected.
Can you be more specific? Because when you say...
Well, I don't know.
No, but you know when you... Okay, calm down. But you know when you say we're the ones that are going to suffer from it, how? Like
higher inflation.
Okay, thank you.
Yeah. So we're talking about 100% tariff here on the first part of the supply chain for, let's say, a smartphone. That could come down to 50, but that's still 50% more than what it was, you know, to get those rare earth minerals. I don't know what of that can be, I guess, recovered in that supply chain before it gets to the end consumer. But overall, it is now more expensive to make that smartphone.
It's just going to make everything more expensive, is essentially the underlying inflation.
Mm-hmm. And a lot more volatility in the stock market.
I must say, I feel like the tit-for-tat and the stock market having its ups and downs is quite good for investors like us who are looking for, maybe we have our eyes on different investments that we haven't bought because we felt like we've missed it. When the market falls, I'm not saying you obviously want to be timing it, but if you're a long-term investor and there's something that you've wanted to invest in for a while, but it's been up and up and up, if news comes out that, I don't know, China's throwing its toys, I was going to say dick, but yeah, anything around. Sorry, maybe edit that one out.
PC podcast.
Yeah.
Toys.
But yeah, the point is that means that you're kind of getting a bit of discount.
This is the time when there's market volatility, and by that I just mean, you know, when the market moves up and down more often. That is when active managers
are buying and selling.
That's when they they do better than just like buying an ETF or buying an index fund, because they are there and you're paying them to do that, right? To go and buy and sell at different times. You're paying them to kind of be the professional and, you know, spot this and like, okay, well, what's going to benefit, what's not. And whereas when the stock market just goes up and up and up and up and up and up and up, like really steady, it's really hard to take advantage of those ups and downs because there aren't any.
And when you say active manager, you mean someone that's professionally managing your money.
Yes.
So if you've given your money for someone else to manage, like what you used to do, it's in moments like that when you can make decisions. And as a long-term investor, if you're just putting your money in the stock market and putting it in there and leaving it, you're not going to be buying, selling, but it's not the point.
And that's why we haven't had a lot of volatility over the last, like yes, we've had pockets of it, but like in the scheme of things over the last even like 10 years, we haven't had a lot of.
So is that why active managers versus like so many people now investing in ETFs or whatever, they've actually done quite well because the market's just done well.
Yeah.
So there's almost not been that many opportunities for active managers to outperform the market or do better.
Yeah.
That's so interesting. So it's at times when things are shitting itself that it's really quite helpful to be with an active manager.
Yes. Yeah, because all you're doing when you're buying an ETF is just like following the market, right? Whereas if you can try and sell some things in your portfolio or sell some things in a fund, before they actually fall even more. And then if you're able to buy the right thing, you're just trying to back stocks that are going to do better than the market. Yeah.
Okay. Does it make you miss active management in moments when it's all turning to custard? You're like, move over everyone, I know what to do.
A little bit. I mean, I probably still do that with my own portfolio, right? Like I'm like, yeah. But it was so funny. Before this little wobble, I was lying in bed literally the night before and I was like, God, some of my stocks have done so well. Like that's just, and I was sick.
You nearly sold
and I was like,
didn't.
The likelihood of them going up another 40% versus like something coming out, like I was like, oh.
And you didn't sell.
And I didn't. But they've recovered now. So I'm kind of like, it's either way, it doesn't really matter. Like it didn't, the fact that I didn't do anything hasn't made me in a worse position. But yeah, it is a good reminder that sometimes, not timing the market is also really good. So, but it is, I don't know, for me, I'm like, when things have done really, really well, like gold, like the graph on gold is just exponential and that is what scares me. And that is why I'm like, oh.
That's why you need to listen to this episode. We'll put a link in the podcast show notes if you want to listen. It's a really good time because there's a lot happening with this particular asset right now and it's not the kind of thing that's probably, you just don't know what's going to happen. So if you want a full deep dive on that, click the link in the podcast show notes. It'll take you to the Investing Club, which is where we've put that specific episode. We recorded it last week. It was all quite exciting.
All very exciting.
Any runners out there? This is every runner's favorite app, isn't it?
Most people.
Most people.
I don't like it.
Okay, so this is the thing. I've got one of my cousins actually. She lives down in the South Island in New Zealand and she has got into biking. It's quite funny because if you put your Strava on when you're biking, you can basically re-watch what you've done and it follows this little squiggle, but you also get to like see the 3D version of where you went, which is quite cool. So like if you're traveling and you're doing a random hike around, I don't know, the Italian cliffs and you put your Strava on, you can I forget my whole life. How great to track that.
I just don't like it. So we're talking about Strava, everyone. I don't like how it's public. I'm such a slow runner.
Oh, so you've just got an ego problem with yours.
I don't want to share it or accidentally share it, and then everyone's like, oh, fuck. 4 hours to run 10Ks. Ooh.
I've become a runner in the last 2 weeks. I ran 12 minutes the other day and I thought, yeah, so that is stunning work from you.
Like saying no, sorry, I am encouraging.
No, it was 2 kilometers. I was so proud of myself.
I also hate that when I'm running and I'm like, gosh, I've run so far. And then you look on Strava, it's like,
1.3 kilometers.
Okay, cool.
You used to run a lot.
In lockdown, I really got into it, like every other person with sourdough and stuff as well.
Have you fallen off the running bandwagon?
It's just hard with a dog that doesn't run. Honestly, my Strava would be like, was I like run ahead and then come back and get her and then run ahead again.
Wait, hold on, sorry. Is all Strava, you don't choose if it's public or private. It's always public?
No, you can choose, but I just get worried that I'd accidentally. Anyway.
Sorry, we move on.
I did have it. Strava, I don't have it and it is about to IPO.
It's about to IPO, which I feel is very exciting.
Yes. Yeah.
I was not convinced on this app when it first came out. I didn't think it was going to go anywhere. Everyone was like talking about Strava like 5 years ago. The fact that it's still going and doing well and is about to go public, it's quite cool.
No date's been confirmed yet, but these IPOs, like they come out in the press, they're like, we're going to IPO, and then all of a sudden they're just like public companies, and you're like, what? Like the turnaround, they don't give you a date of like, we're going to IPO on the 10th of whenever. It's just like all of a sudden they're just like,
why is that?
public. I don't know.
Did you know when you were asset manager, did you get told?
For certain ones, yes. Yeah. Like in the US, it's quite different. But in like Australia and New Zealand, they come round to you first and be like, hey, do you guys want in on this IPO? So they go around, they kind of shop the IPO around and you'd say, yep, cool, we're in for like 10 million or whatever. And they'd do that with a few other institutions. And then they've got kind of, I guess, like the bulk of it done. Essentially, the bulk of the money they want to raise, they've already got like committed, and then they go out to retail and they'll go out to the likes of Sharesies or like trading platforms around the world and be like, hey, do any of your users want in on this IPO? And then they'll be like, yeah, cool. And so, yeah, and that's why Reddit was so interesting because they didn't do that. They went to their users.
Which is so bold.
Yeah.
The amount of confidence to know that you don't need to do that because really it's a safety net. They're going and committing all that money because they don't know if they're going to get it from the audience.
Yeah.
It's like when so many businesses go and raise, they say they're like, oh my God, we're going to a community and we're going to do this big fundraiser, but actually they've got 99% of it already sussed. To not do that with Reddit, and then Reddit's IPO did really well.
It's done so well.
Is it still doing well?
Yeah.
Wow.
Up 300% in just over a year.
God, that's insane.
I know. Power to the people.
But also, who uses Reddit? Do you use it?
I don't use Reddit, no.
It's got amazing SEO. When I Google the weirdest shit, Reddit is the first thing that comes up.
Yeah.
You know, if I'm trying to find out something, it's always Reddit that comes up.
Yeah. It has done really well. There's reasons why this is kind of, I guess, a good indication. Like it's a great indication of the health of a market. You know, when you start seeing more and more IPOs, it's a really good sign because it means that the stock market is in a really good place in terms of like people are wanting to IPO. Like you don't see people wanting to IPO when the market's down because you not only want that support from like institutions and like, you know, that kind of committed.
So this is a big like green flag for the whole stock market basically.
Well, like the more that you see popping up, like if you're it's healthy for the like economy. It's healthy for the stock market having more and more IPOs because it also just creates new and fun things to invest in. So it creates interest from investors. And this is why it's so dire in London at the moment because the London Stock Exchange is having the opposite effect right now. People are just like,
everyone's leaving the
stock
party.
exchange has done shit. The US has done better. Like, why would I IPO on your market when I can IPO?
I'm a little bit worried. Maybe this is me being really doomsday, but I'm slightly worried that all the other markets are going to eventually just have to close down and there's only going to be a US stock market. Like imagine if there was only the S&P 500, the NASDAQ, because why, if no one is excited about going to other stock markets and everyone starts flocking to the US.
The New York Stock Exchange and the NASDAQ.
Well, the idea of there being like everything being centralized from America. Because we are kind of seeing that, right? I know.
With the other week when we spoke about the 25 out of the top 25 most valuable companies, 20 are in the States. Like we're already seeing that consolidation. But this is a really good theme, though. Running has become massive over the last few years. Like Strava is like just in the sweetest spot in terms of leveraging it. But like Gen Z, like running has just become so massive. Like marathons.
Why did you drop Gen Z in there, by the way?
Because they're part of it.
Okay.
Sorry.
Yeah, well, it was just like sort of sound like you were trying to know what's going on with the young cool kids. But I was like, what is Gen Z doing that we don't know about?
No, especially amongst Gen Z.
Really?
So, yeah.
Do you think it's because like classes and everything is so
Community
expensive though?
And probably.
And so it's like an easy, quick exercise.
I think
should we ask the Gen Zs in the room?
We're like, do you think? I don't know.
Guys, why are people running more? Does anyone know?
Health and wellness?
One sec, I'm going to pass the microphone to Emily.
Yeah, as Vic said, way more emphasis on health and wellness, working on yourself, not going to the pubs as much. I think that people are, focusing on themselves and so going out for a run, going to the gym. I even look in my gym and I'm like, it's full of young people that are younger than me as well. Honestly, 15 and 16-year-olds dominate the gym. And I feel like it's just because there's this whole thing of working on yourself.
And we have a new recruit Thursday today and straight on the podcast.
We're really throwing her in the deep end. We're like, come in for the record. This is literally the first hour of work. And we're like, thoughts? Can you maybe talk on the podcast? But Lucy, we would love to know. I mean, you're technically sort of a Gen Z. Why do you think people are running more? Why is it so big amongst, the youths?
So I, much like Vic, got into running during lockdown and I actually stopped when I moved to London because it was just so dark all the time and it was hard for me to find a running route. I think I'll get back into it now, but a lot of my friends use Strava and I feel like they use it in a way that's like Instagram. They love seeing what everyone's doing, where everyone's running. I never got into Strava. I used the Nike running app because you can just track your running and not have to post it anywhere. It's definitely like a social thing, and people love to see where everyone's going and what their running routes and things like that.
Exactly why I cancelled my account.
Yeah.
I love the Nike running app because it just tells you to keep going. There's this trainer that's like, come on, keep running another 20 meters. I'm like, thank you so much, Jeff, or whatever his name is.
Yeah.
I remember doing, like in lockdown, doing exercise at home, I think it was like a Les Mills workout, and it was like lockdown had just started, and I was like, yeah, I'm going to get online. And anyway, and then the instructor's like, come on, Sweden, you can do it. I'm like, oh.
Do you remember me doing dance classes during lockdown?
Oh, yeah. You're like, come on, you should join. I was like,
Because like I actually couldn't think of anything worse than doing a dance
You're like,
class. I was like
"Trust
in
me,
the
babe,
kitchen
it's
being like, pump it. Yeah, work it. But it's like, absolutely not. Never joining. Okay, so
I'm like, I can't escape.
okay,
But yes, so like even marathons around the world have had like massive spikes in attendance, and like so it's a real thing.
community run clubs has become the way to like go on
Meet
dates. No,
people.
but don't give me that creepy like mum face.
I must admit, I was out for a walk the other morning, and like this run club came past, and they just kept coming and coming, and I was like, geez. And then I was like, geez.
I'm just not fit enough to join the run club. I couldn't talk and run. Like I have to sort of like do half sentences.
I did one with our friend in New Zealand, and I was like, I'm going to join this run club. They were like, come on, Vic, come on. I came. I was literally at the back, him having to run with me, and I was like, no, like you go ahead. He's like, no, we all run together.
Oh yeah, because they're the
And
pacers.
I was like,
oh,
no,
God.
please, just like, leave me. I want to walk.
I really want to stop running. Please just run ahead.
It's fine.
Pretend
it's
I
fine.
didn't
Just
join.
go ahead. Bless his heart.
I was reading, you know, that book Lessons in Chemistry, which has now been turned
Oh, yeah.
into a TV series. In that, okay, spoiler, anyone that hasn't read this, watch the TV show,
just
pause
and
like
skip.
move forward by like 30 seconds. So there's a scene in it where the main character is running. So he's a researcher or something. Anyway, super smart. And he runs with his dog. It's actually the most traumatic thing, but he gets kind of bullied for running. And this was in the 50s or something. It wasn't that long ago that running was just like so not a thing.
Yeah.
And it's really boomed.
It is quite weird for humans. Like if you think about back in the day, we ran from danger. Like that was why we ran. We ran to get away.
But imagine trying to run from danger having not practiced.
I know.
God, I wouldn't be getting very far.
I wouldn't be surviving.
It's
Wild.
like, where's my pacer? No one's helping me run.
I can see why there was survival of the fittest. I would not be surviving.
Oh my God.
Yeah.
Survival of the fittest.
Yeah.
It's literally who can run.
That's like evolution.
Oh
It's like
my God.
all the slow runners would get eaten and the fast ones would procreate, and then you'd have, that's how.
I'd be dying. Oh my God. Okay, I need to get past my 12-minute run.
But anyway, Strava, it has been doing fantastically well. It's estimated, so it was last valued at $2.2 billion. Every month, it has 50 million people that use the app.
What is that compared to something like Spotify?
700 million. But
So we're at 50 now.
Yeah.
And they're 700. Okay.
But still, like 50 million people using your app.
Yeah,
Like,
it's a
imagine
lot.
if the curve had that.
God. I mean, we would have definitely retired by now, surely.
We'd be IPOing for 2.2 million. Yeah, billion. Yes.
Far out.
Yeah.
So sorry, so you'll let us know if we get the update on when this is happening. We can tell.
We'll update you on when it's public as well.
Yeah. Okay, cool.
But they're raising money to make lots of acquisitions. So
To buy other companies.
So they have acquired Runner.
Oh, yeah. Oh, yeah, that's
I get served so many ads for that.
Yeah, interesting. So they've bought it.
Yeah, they've bought that. And they're going to make more acquisitions.
This next story,
Yes.
I would like to give you a sort of a bow down moment of you have spoken about this for about a year when I have thought this is an absolute, like, we're flogging the dead horse sort of vibe.
Yeah.
Just for anyone that's not watching this podcast, she just shimmied in her seat, like a little genuinely shimmy. I think that this is such a good example, Vic, of yes, it's
My
great to
investing expertise.
yes, that I was honestly about to say that because I think it's so easy to follow the market, to invest in ETFs. This is a really good example of why it's so great to have the knowledge that you do in terms of how you think about the market and also having worked in it for so long, you've seen things come and go. And when this particular entire industry was absolutely having a total meltdown, which it has been, you were like, I'm holding my shares. I think this is going to make a comeback. And I actually kind of didn't believe you. I was like, stupid. This isn't coming back. Don't believe it. And it is. It's quite impressive. And not even in that long.
Yeah.
I thought this was going to take so much longer to bounce back.
Well, and it is very early days, but it's
But
at
it's
least
still,
it's a
it's on the
sign
up.
of, yeah.
So what we're talking about is just luxury in general.
Yeah.
Right?
The
Like
luxury industry, and in particular LVMH, which is Louis Vuitton, Moet Hennessy. It's the world's biggest luxury group. Yeah, it's obviously got the brands Louis Vuitton, Dior, Tiffany, and it has had a massive week. It's come out with a quarterly financial update to investors, and it showed, I guess, really positive signs of growth. It's come back to the business, and it hasn't been there for a while. The share price has fallen well over 40% since February, which is massive for a company like this. Like, it's got so many brands across champagne, jewelry, fashion, like it's so diversified. For it to fall 40% is quite massive.
And it was a sign of the times in terms of every luxury brand, well, not every, but a lot of them have been struggling lately. And it's interesting because with the champagne piece, I feel like not drinking is becoming a much bigger trend. Where people used to always think about celebrating and they would celebrate with a glass of champagne, it's had this quite like bougie, elitist, expensive, exciting feel to it. On Friday night, I went out for drinks and we got a bottle of champagne and it was so fun and great, and holy shit, I felt awful the next day. But I feel like for a long time, this particular trend, I didn't think it was going to make a comeback. I sort of felt like maybe champagne, people will still drink it, but it's not going to become an investable asset because people are moving away from alcohol.
Yep.
And the same with things like expensive bags and expensive brands. I don't know. A lot of people are now renting clothes and wardrobes. People aren't investing in things like this, like massive, but it seems to be actually doing the opposite.
I think you're right. There's so many newish structural changes that could impact these, like champagne or luxury bags. But what I keep coming back to is like these brands are decades old, and they've weathered like depressions, like Great Depression.
Was there Louis Vuitton bags in the Depression?
Yes, they've been going since like the 1800s. Like
imagine, so tone deaf. Look at my Louis Vuitton. People can't even buy bread.
And you're putting the bread in your Louis Vuitton?
Yeah.
No, I agree. Yeah, but it's, I guess, this is why I love investing in companies that
have been around for a long time
and been
stood
through
the test of time.
These changes, not only market cycles and economic cycles, but like structural changes. And yes, you're right. Like there could be parts of their business that, maybe the champagne part doesn't do as well because of that. But you've got like
50 other brands.
Yeah, you've got so many other brands. And so, and I love that this is kind of a very family-owned business. They're creating a legacy. Like they're investing for the long term. That's how we invest, is for the long term as well. There's just so many. Anyway, it did so well last week. It put on $39 billion in terms of its market cap in one day.
Good Lord.
Yeah, that's a one-day move, and it added $39 billion.
Do you know what is really interesting? I sort of forget this when it comes to investing and especially because we've just talked about IPOs. When you're buying and selling shares, apart from an IPO, obviously if you go and it's your initial public offering and you're taking money from investors to get capital into the business to grow, that's the whole point people go public. You just said that with Strava. They're making all these acquisitions, they're buying these businesses, which is why they're going public, because they want money to be able to make those purchases.
Yeah.
But then you think about when you just said they've added 39, is it billion, did you say, to their market cap, which is the size of the business. That's all money being traded within investors, not the business. So although, yes, when you say it's added that much to it, that money didn't go to the business. So how do you think about?
No, but that means that the business is now more valuable.
Right.
So therefore, if they needed to
issue more shares and get more money in, they would be able to get more because their share price is worth more.
Yeah, and they can do like a smaller percentage. So say they could do, they only needed to raise like 1%, rather than if you're a smaller company, you might have to do 10%. So it's like, and also it's a good, healthy indication, right? Because if LVMH was trying to raise money to make an acquisition, even 2 weeks ago, people would be like, oh, do I really want to give you more money? Like, I don't know, because you haven't done very well.
So it gives them options for growth and options to reinvest in different
and
things.
options for talent, like hiring people as well.
True.
You know, like if you're like, look here, part of your package is shares in LVMH and they've been down 40%, you'll be like, yeah. So all of that really, really helps. It's also quite a status thing as well. This announcement from LVMH lifted the whole luxury sector. Everyone's like, woohoo, luxury's back. So Hermes, Moncler.
Is Moncler even that exciting?
Bougie, like ski gear and stuff.
I just don't get that.
Yeah.
It's got that hideous big red sign, doesn't it?
It's like a status thing though, right? It's like the Canada Goose.
Anyway,
yes. And it's, I guess the reason it's making a comeback is because of China. People are now spending, particularly in Asia, are now spending again on luxury, and they weren't.
Why?
Because people are feeling more confident. People are feeling, more.
Do you think it's because they're like, well, we know that our government is slapping 100% tariffs on.
We're just going to buy up.
China got it.
They've also got new talent in there. They've got a new creative director for Dior. Like there's lots of things. Yeah. So yes. So I was actually with this stock. I was actually buying all the way down, and not all. But
did you?
But I was like, when it was down like 20%, I was like, oh yeah, okay, I'm going to buy some more because this looks really good. And then I was like, I was getting to a point, I was like, oh gosh, this, you're never going to time it right
It's so interesting, the psychology, isn't it? When you're like, you're going down the elevator, it's cheaper. It's like, shit, like the psychology of continuing to buy when it's getting cheaper, it takes so much confidence.
So much confidence the further down the elevator you get.
Yeah.
But also this is kind of, I need to practice what I preach. It's like dollar cost averaging. You buy consistently and regularly no matter what the price is so good.
This is okay. Think of the elevator.
Yeah.
Think at every step of the elevator, the share is, as you're going down, it's getting cheaper. And as you're going up the elevator, it's getting more expensive.
Yeah.
The point is if you're buying all the way down the elevator and all the way back up, you're like dollar cost averaging what you purchased the share at, which is what she's talking about.
Yeah, because you don't know, right, what is the bottom or what is the top or all of that. So it's
the best way to sort of hedge your bets and make sure you're not just buying it when it's super expensive.
And not get caught up in the psychology of, oh my gosh, is it going to turn around? Is it going to do better? Yeah, you get advantage of the low prices, which is great.
I must say, we were speaking at an event last week and for some reason Labubu's came up. I can't even remember why. And there was heaps of guys at the event and I could just see all these blank faces of people being like, oh, because of Labubu. I was like, it's a weird trend. People put them on nice handbags.
I was like, you guys are Labubus. And everyone in the crowd was like, there's a few people.
Just got a few like blank stares, all these guys.
And then I was like,
looking
how the
at each
hell do you
other.
explain a Labubu?
But I did think at that time, I was like, it's fluffy random toys that hang off nice handbags. But I would love to have a nice handbag. I think I've got to the point where I'm not losing my handbag, which is quite impressive for me. Like I've got the same handbag. I've had it for about a year. It's fine. It's pretty. It's gone through the walls. It's gone in many line bikes. It's looking pretty worse for wear.
You would not put a luxury handbag in a line bike.
Absolutely not. Absolutely not. My point here is I never up until recently thought that I would want a nice handbag. I don't know why. It's just never been something I've really valued or been excited by. I think I would. What handbags do you have? I feel like you haven't invested in any, have you?
Oh, I've had a clutch. That was the worst investment.
That was not good, was it?
No, and I should really sell it, but I just can't bring myself to sell it.
Because it was too expensive.
Yeah. Why would you spend that much on a clutch, which you only wear like what? Like I would spend a lot on a handbag that I wear every single day, so you get good cost to wear.
Because I'm kind of impressed you haven't done that. Like you've got really nice handbags, but they're not branded ones.
Yeah, I know.
Why not?
I just changed my mind.
Yeah,
a lot.
I think it is hard when you're spending that much to have something that's timeless.
Yeah. If you want to buy me one though, babe, feel free.
Your birthday's coming up.
Yeah.
Oh my God, actually, do you know what? So I was waiting for a coffee at Ozone, which is this Australian coffee place here in the UK.
New Zealand.
Oh, is
it New Plymouth?
Oh, that's so embarrassing. Okay, it's a New Zealand company. I was standing waiting in the queue to get in and this girl turns around and was like, oh, I listened to the Curve. I love the Curve.
Oh, yeah.
And I was like, oh. Really? Like got so excited. And anyway, she works at Louis Vuitton. Well, she used to work at Louis Vuitton at Hennessy. And I actually said to her, I was like, it's Vic's birthday coming up. Do you have any contacts internally? I know.
No,
I know.
please don't, because then
Sorry,
what would I do for
now
your birthday?
now I've really raised the bar. She hasn't got back to me yet. So
no, I think that's,
But imagine if I was even thinking it'd be quite funny to get a video message from the Bernard, the main guy who owns it.
Or not.
He's the owner of this company. It's just so funny that most people would get excited over like an actual celebrity and Vic's just like Bernard, whatever his name is.
Yeah, like flag the handbag. I want a message from him.
Just a photo. Lol.
Also coming up, not as exciting, but we have the budget coming up in the UK.
Wow, what a segue. So excited for the budget.
This is really exciting because this is when it's kind of like your personal budget, but it's a budget for the country. So you get to see where is the government planning to spend money, where are they not planning to spend money, where are they hopefully going to give us some tax cuts, all that fun stuff. But one of the key things on the agenda that has people talking already is a change in cash ISAs. So for anyone who's not in the UK has this really, really great
kind of like a scheme. What do we call it?
Yeah, scheme thing where it's like you get to invest up to £20,000 a year, every tax year, that is tax free. So then anything above that you obviously get taxed on. But so if you invest £20,000 and it grows to £30,000,
you don't pay tax on it.
You don't pay tax on the £10,000,
which is huge because I think that for ages I remember when we first learned about cash ISAs and stocks and shares and blah, 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 I was always like, tax-free, why is that a big deal? But you kind of do forget that you pay tax. So most other places that you invest in stocks or in the stock market, you pay, it's almost like not capital gains tax, but kind of.
Yeah.
You get a return and then part of that goes to the government, whereas this particular way of investing or putting money aside means that you're not doing that.
Like
so it's really cool.
I was sending my money back to New Zealand and just getting taxed on it there. And I was like,
what are you doing?
Yeah, I had this kind of moment of like, oh, yeah.
Come on, babe.
Yeah, I was like, you know better. And then now, fill up my ISA and then send money back.
How are you filling up your ISA? I know what you earn. There's no way you're filling up your ISA.
I know, that's why I haven't sent any money back to New Zealand. But yes, so the rationale is that they want to reduce the threshold from 20,000 to 10,000.
Oh, annoying.
Just from cash ISAs.
That's so annoying.
Because they want to encourage people to invest the money.
Oh, right. So it's like, don't put it in the cash. Go straight to stocks and shares.
Which, hear me out. I'm here for.
You're about to set about it here, aren't you?
No, I'm half here. I'm half here for it.
Okay.
So 1 foot in, 1 foot out. Well, I am all for people investing more because I think there is too much money, particularly women have way too much money not invested in the stock market. So in the bank and in really low returning things.
If you are listening to this, quickly whip out your phone and see what's in your transaction account. What you want is to look at your accounts every month and be spending what's in there and you automate all of your money out in terms of what you're investing, what you're putting aside into different, short and long term goals. You don't want to have a big amount of money sitting in the bank. It's really literally the worst place for your money to be.
Anyway, you're right. They're trying to encourage people to invest, get higher returns on their money, but they want them to put it into UK stocks.
Oh, shit.
I know. So
I kind of get it.
They're trying to encourage investment into the economy and all of that and into UK companies, and I get it, but I'm also if your mission is to help people grow their money, they should be putting it into the US stock market, because the US stock market's done 11% return per year on average over the last 20 years.
They used to be 10. Has it gone up to 11 now? Wow.
The FTSE has done 6% per year, which over 20 years, that 5% difference is a lot over 20 years. So
but I also,
unless you can make the UK stock market do better, I am not putting my money in it.
But maybe that is the way to make it do better, is you have to encourage people to do it. So perhaps it could work.
But I think forcing people to invest in something it's not conducive for a good financial system. If you're forcing people to do something. We've seen it happen in Asian stock markets. They close the stock exchange because they don't want people to sell. If you
that sounds illegal.
Yeah. So it's if you can't force people to act in a certain way. It's an ecosystem. It's meant to be fluid and people and supply and demand. And as soon as you start effing with it a little bit, it's it just throws it off kilter. Anyway.
Wait, sorry, I'm a bit confused. So cash ISAs, you used to be able to put 20,000 in. Now they're saying you only put 10,000 in.
Yeah.
And the point is because they're trying to encourage that extra 10,000 to go into a stocks and shares ISA.
Into the UK stock market.
But the point being is it's not invest in whatever you want, it's invest in the UK stock market.
Well, they're trying to encourage you to invest in the UK stock market, but
how though? Is it through stocks and shares they're only allowing you to?
There's a natural attraction to invest in your local stock market because pounds into pounds,
Oh, I see.
So there'll be leakage, I guess, to other stock markets around the world. Most commonly probably the US stock market, but there will be we're talking it's about $300 billion is what they're talking about in terms of the size of money.
Instead of it going into a cash ISA. And then
if you could get 100 billion of that going into the UK stock market, that's massive. Do you know what I mean? So it's kind of,
And when you say they're forcing them, it's not as though all of a sudden if you go into your your stocks and shares ISA that it's saying if you want to invest, you have to invest your 20,000. It's more just that it makes more financial sense from a
and there'll be education
currency
around it
standpoint.
and stuff. And also, so say from 1 April next year, they're like, you know what, we're reducing the threshold. People with this extra 10,000 will be like, okay, what do I do with it? Oh, I'll just put it in the UK stock market, or actually I'll transfer it into US dollars and put it into the US stock market. Like,
So it's just easier for people to go straight through their stocks and shares ISA into the UK stock market. But what you're saying is it's great that they're encouraging people to invest more, but in terms of long-term success or wealth growing, it's probably best to be not necessarily 100% in the UK stock market is sort of what you're saying.
yeah.
And people might sort of, just because they don't know enough, follow the system and it goes straight into the UK stock market when really they could be getting probably double the return if they were investing in the US.
Yeah.
Okay.
Yes.
I mean, I will say, I think the fact that, you know, if I think of myself 5 years ago before I knew anything about investing, if there was a way where I was encouraged through the system to not put my money into the, you know, my transaction account, and it somehow ended up in a investment account, even though it's only say 6% return, that's still way better than what I was getting. So I think for those people who are so unaware, getting a 6% return is amazing compared to what they would have got. And then hopefully by starting to invest in the UK stock market, they become more interested in investing, and then they start realizing there's other options, and then they can diversify into different countries, you know?
And hopefully it means that the UK stock market does better, right? And then everyone wins. And we're
I
not,
just feel
we're not
like
talking about 6%, we're talking about 8%. Or like,
the UK used to be this really sort of not wealthy, but when I used to think of the UK in pounds, there was so much value here. There was so much economic promise.
good jobs.
Yeah,
like, great,
people would send like so many, that's why so many New Zealanders moved over to the UK, was because you could get what you could earn in a pound would turn into $3 New Zealand dollars. It was 3 times, you know, the amount. Now it's really not that exciting. I would love to see a world where the UK is starting to be more
exciting.
Yeah. Well, I don't know. I just feel like
it's Brexit, right? Yeah. It's ever since Brexit, which is a whole nother can of worms. And lastly, I saw this headline and I thought, this sounds like a soap story, but I'll do this one.
Was it from the Daily Mail?
No, but close.
Yeah.
Yeah.
So this has been
Is that your newspaper of choice?
Yeah. I would say it's the only newspaper that I say. Oh no, there's a few that I get served on Instagram, and it's generally pop culture type stuff. And I'll click through and have a quick read. But I definitely am not looking at finance and news stories. Obviously, that's the whole reason this podcast exists, is so that you can filter the more interesting shit through all of us. But we were talking behind the scenes about how fun it would be if I got to bring my own story every week. So
I think you should. Yeah.
I know. I think maybe next week we'll start this. I don't know this story, so you can bring it. But this would be hypothetically a Sophie story.
Yes.
Okay.
So Taylor Swift.
Mm-hmm.
Have you listened to a new album?
Yeah, I love it.
Same.
What's your favourite?
Wood.
Really? Do you know it's about having sex?
I know.
Oh.
Yeah.
Sorry. Did I sound like the most prudy person in the whole? It's
about
Do you
having
know
sex.
Woods about penis?
No, but that's why I love it, because I'm like, she's so like good girl.
But the line about spreading the thighs, I was like,
I know, yeah.
It's just know.
I just think it's like real. I don't know. It's got like an old school jingle to it. You
quite
know?
like the Ophelia one.
Yeah.
There's quite a few I like.
Yeah.
I must say, when I listen to the one that's about Charlie XCX,
I
the
know,
romantic,
yeah.
I'm like, God, it's good.
Yeah.
And also, how weird would it be if you had this public feud with someone everyone knew? This I didn't even know "Sympathy Is a Knife," the Charlie XCX song, was about Taylor.
neither.
And now I've listened to the lyrics and I thought, God,
Also,
it's
like,
brutal.
someone must really cut you up for you to write a diss track about them, you know? Like,
Yeah, or it's just great inspo.
so I watched an interview with Taylor Swift and she was like, people come at me all the time because they want diss tracks written about them because it like boosts their career.
Of course.
I was like,
so
oh
it's
my
almost
God.
like doing it about Charlie's probably doing wonders for
Yeah.
her.
But I was like, oh my God, people would. They would start shit with her. And she's like, guys, come on. Like, yeah. Anyway, her debut week of her new album, Life of a Showgirl, sold 4 million copies in 1 week.
Where
Now-
are you buying albums these days?
Well, this is the thing, that we're in like an era of streaming, right?
Yeah.
Everything's online. Why
Like,
do you need to
where
go buy a
did you buy
record or
it?
vinyl or like anything like that or a CD? And to put this in perspective, then this is broken records for as long as records go back. Like this is insane.
as in the amount she sold.
The amounts you sold in
Which
that week.
is so weird considering you don't need to buy them anymore.
Yeah. So it's
Wow.
like kind of bucking the trend, but also she's
How did she sell
really
it?
bucked
Was it in vinyl or CDs?
vinyl and CD. So like any hard record.
Joking, 4 million CDs were sold.
And to put this in
Where are you
perspective,
playing that? I mean, I got some Haim CDs from this listening party I went to, and last night my housemate was like, "Do you want these CDs?" You know, it was from that thing, and I kind of do, but I'm like, where the hell would I play it?
yeah. Anyway, to put this in perspective,
continue.
Beyonce and like Kendrick Lamar sell like 200,000 to 400,000. So like she's done 10 times that amount.
She is iconic.
She's like Michael Jackson. She is like Beatles, Rolling Stones era. She is going to stand the test. My 6-year-old niece is like, I want Taylor Swift, anything Taylor Swift for Christmas. I'm like, you're 6. I'm 36.
And we have that in common.
Like, you know,
I'm like, me too.
I need to grow up or you need to chill out. I don't know.
But I think I was thinking about this. I wonder what she would be like, because if you are that successful and making that much money and making that good music, do you think you would have to get to a point where you just think you're awesome? Like, how would you not have a giant head? I thought about this. I was like, I wonder what it would be like to meet her if she would actually be, and I didn't mean this in a fan way. I meant just what would her aura be? Because you would just have what's the equivalent of big dick energy? You know, she is absolutely killing it.
I always think about appearance and I'm like, you know, my parents.
I always think about Taylor Swift's parents.
Like my parents are proud of me, but like imagine if I was a global superstar that is going to be recognized for generations to come.
So awkward for the rest of the siblings.
Like, do they think when they gave birth to her, they were like, "You're special"?
No, but like think of Dua Lipa, and then you see all the siblings, and you're just like, sure. I mean, don't tell me parents don't have favorites when you see Dua Lipa.
Also, there is a little bit of jealousy from your sibling. I get jealous of my sister if she like looks slightly better than me in an outfit or something.
Totally.
You know, let alone if she was a global superstar.
Yeah, absolute billionaire.
Anyway, Taylor Swift is killing it again.
Before we wrap up this episode, Vic. So last week, which by the way, Emily and I were having a production meeting on Friday, and I was like, oh my God, what was voted? Like, what has been voted for our Halloween outfit?
So you know.
No, I don't. And she was like, I'm not telling you.
I was going to say that.
Do you know? You haven't been told, have you?
No.
Okay, yeah. So basically, last week we put out a vote for what do we have to dress up as. We had the first initial idea was Trump and Melania. The second one was a bull and bear market, which I must say I think is funny.
I think that's funny.
Yeah, same. Like if we got prosthetics on our face or something, quite good. Then what were the other ones? Finance bros.
Oh, that's quite easy.
Classic,
little
easy.
Patagonia
We
vest.
probably put some little, moustaches on. Oh, Batman and fan stocks, because those are like the collection of root
And
stocks.
they're both scary.
Yeah, quite good.
Yeah.
That was it. Anyway, point is, we're not going to find out what we're dressing up as until the episode, and neither are you, sorry. So,
Last Halloween, it was Taylor Swift.
yeah, true.
Because she had such a big impact on the economy
And inflation.
and inflation.
I must say, I think that was maybe one of my favourite things we've ever done. Just dressing up for Halloween. For some reason, it's become a thing. Anyway, so is it next week or the one after we'll be dressing up? The one after. Okay. So watch this space. Thank you, everyone, so much who voted. Also, we are doing a themed episode that day. We're going to take some investing horror stories or money horror stories. We've got a Curve hotline, which is in our podcast show notes. If you want to leave a voice note or write a comment or flick us a DM, whatever works for you. We're trying to collate as many horror stories as we can. Not to put you off investing, but just because it's fun to talk about.
So send us your investing horror stories and we will read them out on Halloween.
Ooh, scary. Don't forget to vote on the day that this is released. I would like to know if we're moving the Curve Weekly to a Tuesday or leaving it on a Monday. Because it would be quite good to say see you next Tuesday at the end of every episode.
Not really.
No?
No.
Okay. Inappropriate.
Yeah,
okay. Okay, we'll see you next Monday.
Bye.
Okay, can you have a bit more enthusiasm?
Sorry, I was
for the
like trying to think of a different way to say it.
See you next Monday.
Just see you on Tuesday.
Or
Monday.
Wow. This is so awkward. Okay, and bye.
Thank you so much for listening to the Curve Weekly. Make sure you hit the subscribe button to stay up to date with all the money, biz and stock market news. And if you like what you heard, we would love a review. Thank you.
Yes, we would love a review. But if you
Only
did
a good
hate
one.
it, please, don't leave one if you hate it. No, but in all seriousness, could you please leave a review? Because it really helps other people find our cute little podcast.
And we hope you have a good week and see you next Monday.
Bye.
Bye. Sweet. Yeah. See you next Tuesday. Lol. See you next Tuesday. I mean Monday.
No, actually, though, new episodes out every Tuesday. Okay, quickly. The Curve was created to empower and educate you about investing, but we are not financial advisors.
Our platform exists for educational purposes only, and it doesn't provide personalized investing advice for your individual needs and should not be relied upon to make an investment or financial decision.
And always remember to do your own research before making any investment or financial decision.
We're here for any knowledge and support you need, but the final call is always yours.
And thanks for being here.
You got this.
Yeah, we know you got this.
Welcome to
Okay, fine.
such a presenter. Welcome to the Curve Weekly, where we read the finance news so
it's
you don't
kinda
have to.
fine. Okay. No, I can't. Now I'm embarrassed.
Okay. Welcome to the Curve Weekly, where we read the finance news so you don't have to.
I'm Sophie Hallright.
And I'm
Oh, fuck. Okay, sorry. Okay, start again.
Okay.